Ladies and gentlemen, welcome back to the channel. I hope you are having a great start to your weekend. I guess you're midway through your weekend. I hope you are enjoying it nonetheless. Charles Payne is sounding off on AMC failures to deliver. Now, we're going to talk about this. We're going to get into everything else that is happening with AMC Stock. We're going to look at the FTDs, all of the data, and the charts. So I hope you are ready. If you are, then, well, stay tuned for the rest of the video and hit the like button and subscribe to the channel if you have not done so already. If you are not ready, then this is not the video for you. Come back later when you are ready. So, first things first, let's start with Charles Payne sounding off the alarm on AMC failure to deliver. Is there a naked short selling problem with AMC stock? Among the meme stocks most in focus right now, AMC Entertainment continues to see wild price swings. In fact, today's 3.5% move to the downside is relatively muted for the cinema operator. Shares of AMC stock have often seen double-digit intraday swings in recent trading days as volatility in this name picks up. For traders, speculators, and those using momentum strategies, this volatility can be a great thing. However, for most investors, volatility is equivalent to risk, meaning AMC stock is among the riskiest out there. That is reflected in the company's options pricing. However, another factor that's recently been highlighted to those in the financial media is AMC's failure to deliver numbers. A number of reports highlight the fact that failure to delivers amounted to approximately 70% of the entirety of August's trading volume. That's incredibly high and could be due to extreme volatility seen in the name. However, popular Fox TV personality Charles Payne has stoked this story, recently posting on X, formerly known as Twitter, about the issue. Let's dive into what failures to deliver are and why this is intriguing for many investors right now. AMC stock dips, but failure to deliver data stokes interest in AMC. According to recent reports, total failures to deliver in August for AMC stock came in at 264 million shares. That means that 264 million out of approximately 380 million shares that traded hands during the month of August were not able to be delivered back to brokerages. When a trader cannot return shares they've borrowed, that indicates some market inefficiencies are at play, which is certainly the case for AMC stock right now. Many AMC enthusiasts suggest that these failure to delivers must indicate there is naked short selling going on in the market right now. Naked short selling refers to a sophisticated and illegal strategy where institutional investors essentially create synthetic shares, allowing them to short more than the outstanding flow at any given point in time. The existence of these synthetic shares can theoretically drive a stock much lower over periods of time, creating massive profits for short sellers. While there's no indication this is the case, there's obviously a narrative building, or at least some questions being raised. Don't you like that first sentence? While there's no indication this is the case, what do you mean there's no indication? 70% of AMC's trading volume was failure to delivers. Are you joking? Okay, they must be joking. Let's take that as a big joke. As noted by experts on failure to deliver issues, liquidity problems, system failures, and potential market manipulation could be driving these numbers. I have no idea what the driver of these failure to delivers are. However, it's clear to me AMC is a company in trouble. In trouble? Says accordingly, it's easy for many speculators to ride a wave higher, but when the tide turns as it has, that's the way things can organically go. The market isn't always manipulated as many suggest. Then what is your ultimate answer to this? Obviously, he just has no idea what he's talking about. How is this stock not naked shorted, or at the very least have a bunch of synthetic shares out there? That makes absolutely no sense to me. This is how delusional some institutional investors are, analysts are on Wall Street today. The SEC, all of them, they're all delusional, okay? Take a look at AMC's FTD numbers as we currently have them. So for Friday, you had FTD numbers of 29.3 million. Tomorrow, well, not tomorrow technically, but Monday, you're going to have FTDs of about 25 million. On Tuesday, 36.5 million. On Wednesday, about 51 million. And then you fall off, and then you go back over a million on, Friday, September 29th, and then you're back over a million at 1.5 million by October 2nd. So over the next couple of trading days, you have a lot of FTDs that need to be closed out. per the T plus 35 settlement time. So that could help drive some of the potential upside momentum here in this next upcoming week. Now, if you actually look at the charts, I do still continue to believe what I have said many times previously. I think the bottom is in at $7.05 per share. I don't expect any continued downside from here, or at least not under $7.05 per share. Why? It's simple. The stock has fallen a lot recently, even on Friday, where markets took a turn for the worst, and really your specific companies that are vulnerable to a recession got destroyed. AMC, not so much. AMC was basically flat on the day, down 1.04% in regular trading, up 0.79% in after hours trading. That recession, that downside, that bad news, that all of it has already been priced into AMC stock. So I actually think AMC is a bit of a hideout here if the markets do continue to go lower. Now, if the markets go lower to a certain extent, sure. If the markets fall 20%, is AMC stock going to revisit $5 per share? Well, that's probably likely. But unless you get some huge downside, this overreaction potentially to a recession or bad data or bad earnings or a banking failure or whatever else happens, without something crazy, long story short, you don't get AMC stock, in my opinion, under $7.05 again. And we've really seen the stock just trading sideways over the past 2 weeks or so, really not reacting to the same degree as the market. So I do think AMC stock is a lot less vulnerable in that regard. If we take a look at some of the technical indicators like the MACD, whoa, has been positive for quite a while. Now, it's not positive on the grand scope of the MACD, but in the short term, you are getting a cross here of the yellow line going above the blue line. Now, every time this has happened dating back to January, you have seen quite the rally in AMC stock, especially if you have been negative. Back here in August of 2021, well, you kind of dipped down right in the beginning, and then you went up from $159 to about $290 per share. You came back down, you were negative, you finally went positive again back here in February of 2022. Well, it was a fighting fight to get back positive on the MACD, but you finally did. And AMC stock went from about $70 per share all the way up to about $190 per share. Same story back here. You went negative and you were fighting for a while, trending upwards on the MACD, and then you finally, from the point of crossing over and going short-term positive on the MACD, again, yellow line going above the blue line, AMC stock went from $52 all the way up to $150 per share. Back here as well, you can see the same thing. You were negative, you went positive in the short-term MACD, went all the way positive on the overall indicator, and AMC stock went from about $33 up to about $75. So if this continues, if this trend, I shall say, continues, and AMC was really negative on the MACD, yellow line breaks above the blue line, if we can go all the way to positive on the MACD, that could be hundreds of percents of a gain for AMC stock here in the short term. Now, it sounds crazy, right? But the average analyst price target is around $19 per share. That's upside of about 150% from here. Now, if you do get 150%, that's going to put you, like I said, about $19 per share. But even to get back to 20, that would be upside of 163% from here. To get back to $25, that is upside of over 200% from here. And that is what a lot of people are starting to think AMC stock could do. And I don't think it would be such a crazy goal to actually get there. Now, after all, AMC stock is the most shorted you have ever been with AMC, period. If you look at the official short interest reports, this is obviously accounting for the reverse split that we've seen, so the numbers are obviously a lot lower than what they were before, but that's because, I mean, the split, so it'd be times 10 to all of these numbers. Right? Hopefully you guys understand that. Now, the previous high for the short interest we've seen was back here in the reported time of August 15th, and you had 17.11 million shares sold short. Well, that covered AMC share price from about $33 down to about $13. That was that fall and the change in the amount of shares sold short. Well, what you have seen even recently, accounting from about $13 per share down to $7, well, we don't know exactly. Last we knew, the amount of shares sold short was 23.21 million. This was a change of about 36% just on this reported period alone. So the amount of shares sold short is likely even 26, 27, potentially 30 million shares sold short. We know those last couple of dollars once you get down to a low price, you need to see a lot of shares sold short to actually get you down there. And Ortex is estimating almost 26 million shares sold short, so that's pretty close to my estimate. Now, if you look at the cost to borrow fees, you haven't seen a lot of upside volatility, so you haven't seen high cost to borrow fees. Think about it like this. If you have shares of AMC and they've been doing nothing but losing value, and you've lost 99% of your value within the last 2 years, you're not going to charge crazy high cost borrow fees to lend out your shares. 3 to 8% might sound reasonable if you don't plan on selling your AMC stock, since you haven't really got upside in the past 2 years. At least you're down quite a bit on your position. So go ahead and keep that in mind. Now, if we look at the option activity for this upcoming week, let's see what we're looking at. And you do have a lot of option activity around the $9 call, the $8 call, as well as the $8.50 call. A lot of the open interest is held just outside of the money on both sides here. If you look at the put, the $7.50 put is pretty active. The $8 put is pretty active, but the calls are starting to outstrip the actual puts here, and you can see this reflected here as well in the put to call ratio. Put to call ratio is falling off a cliff now, and it's no surprise the put to call ratio is falling off of a cliff, and AMC stock is bottoming out. Now, we do know, again, we have risk factors like market volatility. Any downside in the markets could be bad for AMC stock. You get that, you understand that, but hey, as long as nothing crazy happens out there, AMC stock should be in this bottoming process, should be able to actually make a move back to the upside. So I'm very optimistic on, a MOAS, a short squeeze, a potential upside move, whatever verbiage you want to put on it. I think the risk to reward here with AMC stock is like 98% chance you make money, 2% chance you lose money from here within the next 3 to 6 months. That's my personal opinion. That's not a fact, so don't be confused on that. My personal opinion is AMC stock goes higher from here. That will be a higher price from here 6 months from now with about a 98% chance. 2% chance we are lower than $7.67 6 months from now. My personal opinion, come to your own conclusions. Let me know what you think about all of this information down below in the comment section. Hit the like button and subscribe to the channel on your way out of this video. Most importantly, enjoy the rest of your day, and I will see you in the next one.